Hey everybody, Jake here at TrendSpider to go over the weekend video update, the Thanksgiving edition. We are actually going to do this video a half day early. We do have a half day of trading on Friday, but I'm going to go ahead and get it out now. All the levels that we talk about will still be relevant going into the end of the week with the half day Friday. So definitely some interesting things starting to play out in the markets, and we will dive right into it. Before we do that, just want to mention we do have the Black Friday sale at TrendSpider, so definitely check out the link in the details below to learn more about how you can get up to 60% off plans on our website. So looking at the broad markets first, we'll start off with SPY, the S&P 500 ETF. We do have an ascending wedge here on the daily chart. You can see here that we have started to move up pretty strong over the last 2 days, so on Wednesday and Tuesday. And we are starting to get near this resistance zone above. That's anywhere from around 407 all the way up, depending on how long it takes. You know, we could go all the way up to 415. And remember, I always try to say this because it's really important. Diagonal zones change with time, right? So like on Friday, if we went straight up, oops, what the heck was that? Let's try that again. Friday, if we went straight up, the top of this zone would be right around 408. Now, if we did something like this, we pulled back, retested, went like this, and then went up, that's closer to 413, 414. So remember, especially when you have very steep, kind of angled ascending wedges, rising wedges, whatever you want to call it, this is definitely something to consider. Tomorrow's level is not the level that you'll see in a week or two. So just keep in mind, you know, pretty much starting the wedge from the candle here on October 5th, connecting this candle to the November 15th candle. So just connecting those wicks and creating this zone. If you do want to create it on your own and track it yourself, those are the 2 points. And then on the bottom, you've got the October 13th low here connected to the November 9th low. And then we just extend that out, and that's how you get this ascending wedge. So all in all, we are still trading in an ascending wedge. Generally, these are looked at more as statistically bearish, meaning that they do break down more than they break up, but that doesn't mean that you can't get upside and a breakout to the upside through these. So just keep in mind, price action rules all, and we'll see which way we do break over the next, could be a few weeks. The apex of this ascending wedge is right around December 19th, December 20th. So there's still some time if this thing really wanted to make its way all the way to the end here, but we will see what happens. Now on the weekly chart, you can see here on the right, we have this area. We're essentially measuring the volume by price. We're measuring where all volume has traded at different price levels since all-time highs. And you can see here, this area shaded in orange is what I like to call a volume gap, an area where you don't have a lot of liquidity above, meaning you don't have a lot of volume that's happened here. So you're going to have less of a chance that people get back to break even and start selling because, you know, they dealt with the drawdown. Now they're back to break even. We don't get that until around 411 to 412, which is right in line with the all-time high anchored VWAP. So pretty much the VWAP here is right around 411. This red zone here, the break-even supply zone, is anywhere from around 411 all the way up to around 416. So pretty much 411 to 416 is a very important area to watch above. And as we've seen before, price can move very quickly through these volume gaps as well. So that is the look on SPY. We will look at the Qs now, and the Qs are really trading kind of in this line in the sand, if you will. It's an SR flip, meaning you had previous resistance in early October and then late October. We broke out, we pulled back, we retested this area, held above it. We did intraday breakdown slightly on Tuesday, but remember, generally you want to look at a breakdown with conviction that you actually close below that area. If you just get an intraday move down, it's likely, you know, just stopping people out, especially if you get a strong close above that. So that's exactly what happened yesterday on Tuesday. Today on Wednesday, we did have a nice breakout. You could even call this a bear flag, or excuse me, a bull flag that's starting to form and break out as well. And really, you've got that across the board. Many stocks that we're going to look at today have bull flags forming, and many of them broke out today. So on the weekly chart, you'll see here that we'll do exactly what we did with SPY, which is essentially measuring the volume since the all-time highs. That's what this little dashed line is here. So as I move it, it changes where we measure from. So as I move it to the all-time highs, we're measuring volume since then. Notice how much volume is occurring here. We've got pretty much what I like to call a volume shelf. So this area right here, an area which includes the point of control. The point of control is just the largest volume node, but you can see the prices above this area, and there's not a ton of volume above. So, if we move up, the next area to watch is definitely this resistance zone from the falling wedge we're in, and that goes anywhere from the upper 290s to the low 300s. Remember, this is a function of time. It's a diagonal line. So if we move straight up next week, we could test the top of this resistance zone around 305. If it took a few weeks, we could be down around 300. So just remember, always, if you're using diagonals, it is not a static level. It does change as time occurs. Let's go to IWM, another one that's looking relatively strong here. If we do break above resistance, we're a lot closer to this diagonal resistance zone than we were on the Qs. So same thing, we're anchoring the volume by price from the all-time highs. Notice here that we're at this resistance zone. I'm going to color this red so we don't get confused. This has been resistance back in August. It was resistance once again earlier this month. And now we're trying to retest this area once again. Now, what's really interesting is we have the same thing that we have with SPY. We've got this huge volume gap here. There's a lot of room for the price to move up, sometimes relatively quickly, because you just don't have a lot of friction for price to move through until we get all the way up here to the right around 200. So not only a psychological level, but also a pretty heavy area of supply. We'll color this red because it is going to act as potentially resistance. And remember, it will act as potential resistance if we get there, because imagine that you bought in August at 198 to 200. Then we reverse, we draw down all the way back to lows. We even hit a new low in October. You just dealt with a huge drawdown. You just dealt with almost a 20% drawdown. So as you get back up to where you bought, either you, maybe a group of people in the market, maybe just in general, you can see here there's quite a bit of volume here. This volume is likely going to potentially what's called break-even sell. So that means that you get back to break-even, you sell some, you either scale out or you take the whole position off, and that's how that adds supply onto the market and can become a resistance level. So 198 to 200, if we did break out, would make sense to me, but we do need to break out of this resistance zone first. So, really a close above 190, I think, would do it. But remember, that's assuming that maybe we move up through that next week. 188 to 190 would definitely be an important area to break above. Now, on the daily chart, pretty much just a very basic trend zone here. We've got higher lows. We bounced off of it and hit higher lows pretty much this whole week. So that is something to keep in mind. The big thing would be to break this 189.55. That's the previous high here from November 15th. So that's kind of the main thing I'm looking at, is right around 189 or 190. So that kind of is both on the daily chart and on the weekly chart too, that diagonal trend zone to keep in mind. So 189.50 around 190 is definitely the area you want to watch. Now let's look at Bitcoin, and surprisingly, this thing is holding very well considering everything that's happened in the crypto space over the last several months. We did have a descending triangle breakout here on the daily chart, and funny enough, we actually have a descending triangle on the weekly chart as well, two different points that we're using. Here it's the November 5th high, which was the beginning of the descending triangle. Here we're looking at the May 2022 highs. So two completely different time frames, but still the same setup. One's breaking out, one broke down over the last couple weeks. We do have a potential hammer forming on the weekly chart, but remember, I did this video on Wednesday, the day before Thanksgiving, so there's a lot of time left for this to make a move. So can't really look too much at the weekly chart at this point. A lot can change by Sunday, but it is worth noting that we are starting to break out here on the daily chart. And just a break of this previous low that we saw on November 21st would definitely be a bear signal. Until then, we're just kind of consolidating here and just range bound for this time. Let's go into some individual names. We'll look at Apple first. Another one that's got the same setup in two different time frames. So on the daily chart, you've got this resistance zone here that has acted as pretty hard resistance multiple times over the last week and a half. So you can see 1, 2, 3. We barely missed closing above this area today, but we technically did not close above it. So still having trouble right at that resistance zone. So if we can break above it, I would definitely say that is your bull case. Your bear case is if we break down through this November 9th low VWAP. And at this point, this is right around 147.50. Remember, if the price is above the VWAP, the anchored VWAP, it's going to continue to move up because volume is happening at a higher price than what your VWAP is. So, this will continue to move up. So this will also change as time evolves and price action evolves. So really need to get above this resistance zone, and we will see what happens next in the next couple days and see which way we do break. Now, I'm going to turn off the volume by price. I really just wanted to focus on that for the broad markets, but you can see here, symmetrical triangle here on the weekly chart. You can see that we're kind of trading in the middle of this symmetrical triangle here. Not a ton going on. Not a horrible candle for the week. We'll see what Friday brings us, but definitely your main level you want to see hold would be that November 9th low VWAP. And as I mentioned, probably by Friday, that's going to be right around 147.50 or so. Going into XOM, XOM looked like an absolutely beautiful short setup, and you actually did have a nice move down. So you had a couple things playing out here. So you had the RSI showing negative divergence, which technically it still is. And then you had the MACD bear cross early in November, second week of November, and we're still continuing down. You can see that the MACD is starting to kind of move quicker away from the signal here. And so we're at almost a triple top right here, as you can see with the price, this red zone here. But same thing, we do technically still have this negative divergence. You've got the RSI hitting lower highs. You've got the price pretty much flattening out here. So you do have definitely still potentially a reversal point that we're getting near, but we will just have to see. This would definitely invalidate if we get a close above the previous highs. That's right around 115 or so. So definitely watch that for possibly this potential topping pattern to invalidate. So the daily close above 115, I think would definitely do it for invalidation of this potentially bearish setup. Now, on the weekly chart, we've got this just huge, barely noticeable ascending wedge, right? So like it's not a channel because the resistance and support zones are very, you can barely see it, but they are starting to converge a little bit. That's what creates the ascending wedge. And you can see here that we could just keep going up within this wedge for the next year. So definitely in kind of a weird spot, definitely room to move up here. The resistance zone above is in the mid 120s. So keep that in mind if we do break above that 115 area on the daily chart. Moving on to AMD, this is definitely one of my favorite setups here, or at least it was this week. You had a nice breakout on Tuesday. You had a nice continuation move on Wednesday. Not necessarily the best close here, but this is when you definitely want to look at the wick. What was going on within this wick? Was there a lot of volume? Was there no volume? And that's when the raindrop chart definitely comes into play. So if we look at the raindrop chart, one, I'm not a huge fan of the fact that we had a green close, but a red raindrop. To me, that sometimes will signal potential divergence. So anytime you've got a red raindrop but a green close, I'm definitely going to look at the red raindrop more than just a green close. And notice the similarities here as the last candle. So you had this candle, this raindrop that looks very similar to this raindrop here. Not a ton of volume at the top of the range. So remember, these little squiggly lines on each side are the volume profile for the first and second half of the day, at least if you're on the daily raindrop chart. Notice that you've got a lot of volume down here. So price had to drop in order to find buyers, something that similarly happened back on November 15th. So definitely something to consider, possibly a little bit of a pullback going into the end of the week. But the main area to watch above would be the gap fill at 83.46. That would be definitely an upside target for a lot of people. And then on the weekly chart, you'll see here that we did close above the August high VWAP zone. So that's definitely a big win for AMD. Acted as very hard resistance last week, and then we finally closed above it. Or technically, we have not closed above it because the week isn't over. We've got a half day, but we'd have to drop almost 2% on Friday to not close above this August high VWAP. So just keep in mind, there is still half a day left on Friday. These weekly candles are not fully complete yet, but definitely we do want to hold above right around 75. That's right where your August high VWAP is. So keep 75 in mind if we do have some type of sell-off on Friday. Now, Tesla, this is one that's been tough. You've just had constant selling here. Which was definitely, there's no way other to say it than just very bearish. But then, what you did have is you had some divergence forming here. Let me turn on the regular candle or the hollow candle. You'll see here that, you've got this falling wedge, and I actually just found this yesterday. I didn't even really notice we had a falling wedge playing out. But then I turned on the RSI. I used the RSI 5 because we're on the daily. There's 5 days in a week. So I'm essentially looking at the weekly RSI using a RSI 5. And you actually did have a close above this falling wedge resistance. So technically a breakout here on the daily chart. And the first upside target would simply just be this swing high here from November 1st. The VWAP from that area is right around 192 to 193. So if we did have another strong day up in the next day and a half, 2 days, that would definitely be an area. It was an area back on November 15th where Tesla did have some trouble getting above that zone. So decent look here. RSI has room to move up. Technically closed above 50 here. So possibly maybe a short-term reversal. Definitely a longer-term downtrend still in play. But if you look at the weekly chart, this is very similar to the weekly chart that I have had up for the last month or so. Previous lows from March and May of 2021. You then have your COVID low VWAP, and that's exactly where we bounced the week of November 7th and then the week of November 14th. And then we broke down through it, but look at this hammer forming on the weekly chart. If we have a strong close on Friday, definitely possibly, something to keep in mind for further continuation up. And this is just where you use basic horizontal levels. If we did continue up, I would just look at this previous area of support, which would then act as resistance, possibly anywhere from 206 all the way up to around 210. So keep that in mind on the weekly chart, but definitely on the daily chart, we would want to continue up and retest that November 1st VWAP, and that's right around 192 to 193. Last but not least, Microsoft, which is definitely one of my favorite setups into the week, the last day of the week and into the week ahead. You've just got a very nice bull flag breakout here. So you had that on Tuesday. You had a nice continuation up today. On Wednesday, your main first level that you want to get above is this previous resistance zone. So you have multiple times where price acted as, price was rejected at this area. And that is anywhere from around 250 all the way up to around 251. I would just call it 250 to 252. That would definitely be your zone to watch. Now, if we break above that, we do have a gap above. So we also have a gap from right around 260 up to around 265, give or take 20 to 30 cents. So that would be your next area to watch above this gap from the gap down on September 13th. And definitely just a beautiful bull flag breakout over the last couple days. Your RSI is definitely a little high here, but really, RSIs can be oversold or overbought for much longer than they, should be. So just because you have a overbought RSI doesn't really mean anything, especially when you're only looking at a 5. Here's a little trick. If you did want to look at maybe a longer term RSI, simply just increase in increments of 5 if you're on the daily chart. So let's go to the 10. You'll see here that we're not overbought yet. So that's the 2-week RSI. If we do 15, that would be the 3-week RSI because you've got 5 days in a week times 3. So, you know, there's still plenty of room to move up on kind of the longer term time frame with the RSI here. You know, worth considering that, you know, we could be breaking out here on the 15-day RSI, and you definitely can use RSIs just like price action when you do have breakouts or breakdowns. So that's the daily chart. On the weekly chart, if you remember watching my analysis on Microsoft a few weeks back, maybe even a month back, we were looking at this area to potentially break down, and we did break down intra-week. I'll circle it here for you. So we did that once, and then we did it twice, but we did not actually close below this level on the weekly chart. If you're watching a level, whatever time frame it is, if that time frame doesn't actually close below your level, you know, at least you know, a lot of people look at the close to determine if it's actually a breakdown, not an intraday. You know, if you're looking at the weekly chart and you've got a daily candle that closed below it, but at the end of the week you held that area like we saw on the week of October 31st, then that's, you know, that's still holding, and that's exactly what happened. You had a big move up over the last couple weeks, and still a lot of area above to potentially move up. You've got kind of all this area here. We will just turn on the volume by price here just to check it out and see what we're working with. So if you notice here, we've kind of got that same volume gap here. We're kind of in the middle of it. And that could have price move all the way up to around 253 to 255. And that's kind of right in line with this previous area that I mentioned, maybe a little higher, but then, you know, that gap above would be also something to consider. But remember, this area here, this pretty much from 254 all the way up to around 264, you just have a lot of shares that are likely holding at an unrealized loss. As the price gets back up there, you definitely will have at least some people either scaling out and once they're back to break even, or you know, taking their whole position out and moving it to something else. So that is the weekend video update. I hope it was helpful. And remember, if you do want to give TrendSpider a shot, now is the time. We've got our Black Friday sale going on. And if you have any questions, remember, you can always reach out to our Twitter account on Twitter, because that's where it is. Just DM us. We're happy to answer any questions that you have. And remember, our customer success team is always happy to help as well. hello@trendspider.com is how you can reach them. Thanks so much again. Happy Thanksgiving to everybody who is celebrating the holiday tomorrow on Thursday. And we will do this next video probably in a week or two. So hopefully this analysis was helpful going into the next couple weeks, and we'll see you next time.